Ever wondered how traders make profits in a matter of minutes? Yeah, me neither, but apparently it's a thing. It's a question that has never kept me up at night. But hey, some folks lose sleep over it. In this financial world that changes faster than you can say stock market, there are innovative trading strategies popping up faster than popcorn kernels. Today, we're going to dig into one such strategy that's not just intriguing, but apparently works like a charm. This strategy is known, quite dramatically, as scalping trading. Scalping trading, as the name might suggest, is a fast and furious strategy that is all about making small yet consistent profits. It's a type of day trading strategy, where traders aim to take advantage of minuscule price changes in the stock market. The goal isn't to hit the jackpot on a single trade, but to collect small profits over a large number of trades. This demands a keen understanding of market dynamics, an ability to read and interpret price charts, and most importantly, the guts to make split-second decisions. Traders practicing scalping need to be on their toes, glued to the market, and ready to pounce the moment an opportunity presents itself. Think of scalping trading as a high-speed chess game where every move needs to be calculated and executed with precision. Each trade is an opportunity and every moment counts. The stakes are high, the pressure is insane, but for those who can master this adrenaline-fueled art of scalping, the rewards can be, well, worth it. The most successful scalpers are those who can keep their cool when the pressure is on, make quick and accurate decisions, and possess an in-depth understanding of the markets. They are the traders who thrive on the thrill of the chase, the ones who find excitement in the rapid-fire world of scalping. So, in a nutshell, scalping trading is a breakneck strategy used by traders who aim to profit from small price changes in the market. Think of it as a game of quick wits, where traders need to make lightning-fast decisions or they are out of the game. So, what's the secret sauce here? Let's dive deeper into the rabbit hole. Step 1. Use short-term charts. In this magical world of scalping trading, it's the short-term perspective that wears the crown. This means that scalpers are more likely to be found hovering around charts that range from a few fleeting seconds to a few measly minutes. Oh, and while history might be a great teacher elsewhere, in scalping, it's as useless as a chocolate teapot. Step 2. Cut losses early. Scalpers are the elite ninjas of the trading world, making swift and precise decisions. Holding on to losing trades in scalping trading is as welcome as a skunk at a garden party. These traders are quick to jump ship at the first sign of trouble, focusing instead on the next shiny trading opportunity. Their philosophy is simple: the faster you run from a loss, the you can stumble into a gain. Step 3. Follow trends. The trading world is all about being on your toes, and scalping trading isn't any different, even if it moves at warp speed. Scalpers can sniff out a market trend from a mile away. They make their calls based on the market's whims, trying to bring some order to the chaos. Step 4. Conduct a multi-time frame analysis. This a thorough examination of charts that cover seconds, minutes, hours, or even days. It's like getting a bird's eye view of the market, assuming the bird is a hawk with laser vision. This broader perspective is what lets scalpers peek into the future and plan their moves accordingly. Step 5. Protect trades with stop-loss and take profit orders. Yes, this step is vital for every trader, but for scalpers it's as essential as having a parachute while skydiving. With the ever-looming threat of their trades going south, they need to have a safety net. And this is where stop-loss and take profit orders come into play, acting as the guardian angel for their investments. Step 6. Understand asset correlations. This calls for a deep dive into the behavior of different assets and how they relate to each other. It's about finding patterns and links between different investment vehicles, kind of like playing connect the dots, except the dots can make or break your bank account. So, there you have it, the mystical world of scalping trading. It's all about sweating the small stuff, making decisions on the fly, pulling swift moves, and being in sync with the market's erratic heartbeat. Scalping trading isn't just limited to one type of asset, because why limit your stress to just one market, right? This strategy is as versatile as a Swiss Army knife, opening up a Pandora's box of investment markets. Savvy scalpers can choose to dive headfirst into a whirlpool of stocks, Take a leap of faith into the ever-fluctuating world of cryptocurrencies, or bravely trek into the wilderness of commodities. The choice is as broad as the sea, teeming with opportunities for those brave or foolish enough to dip their toes. The charm of scalping trading lies in its flexibility, or shall we say, its unpredictability. This roller coaster of a market approach thrives on assets buzzing with high liquidity and volatility, allowing you to experience every conceivable high and low. These key elements pump adrenaline into the market, creating a playground for traders with a taste for the dramatic and a hunger for quick yet uncertain profits. You may ask how these brave scalpers navigate the wild waves of these volatile markets. How do they know which assets to focus on? Well, that's where their secret weapons come into play. A popular method involves using technical indicators, because who doesn't love a good guessing game? Indicators like moving averages and volume-weighted average prices are just advanced dowsing rods that scalpers use to predict market movements. Another equally effective strategy is the identification of chart patterns. These patterns supposedly offer a cryptic visual representation of market trends. Mechanisms such as head and shoulders and triangles are examples of these patterns. The naming conventions may seem like a bizarre secret code, but apparently they offer vital tea leaves reading into the market's possible future direction. In conclusion, scalping trading isn't a one-trick pony. It's a full-on circus, filled with a world of possibilities and uncertainties. Some of the popular strategies include using technical indicators like moving averages and volume-weighted average price, and identifying chart patterns like head and shoulders and triangles, because let's face it, who doesn't love a good gamble? To wrap it up, scalping trading is a fast-paced trading strategy. It's pretty much like a heart-stopping roller coaster ride, just without the fun. It involves making decisions at the speed of light to take advantage of the teeny-tiny price changes in the market. This method of trading is marked by incessant decision-making, demanding scalpers to be more alert than a cat on a hot tin roof. It's not merely about making quick trades. It's about the knack of understanding the convolutions of price fluctuations. It's solving a Rubik's Cube in record time. Scalping uses short-term charts like they're some sort of magic crystal ball, offering a real-time peek into market conditions. This calls for immediate interpretation and prompt action, sucking up a scalper's focus like a black hole. It also demands an exit strategy faster than a rabbit being chased by a fox, all in the name of preventing a financial apocalypse. Scalpers are more like trend groupies, riding the market's momentum wave to make their gains. They conduct a multi-time frame analysis to comprehend the market context, like trying to solve a jigsaw puzzle that keeps changing. They also need to understand asset correlations, because apparently their trading decisions hinge on these complicated relationships. A scalper uses stop-loss and take-profit orders as if they're some sort of magical shield to protect their trades. These tools limit losses and lock in profits, acting like life-saving techniques within this volatile trading strategy. Despite turning you into a human stress ball, scalping could be profitable, assuming you've cracked the code to understanding market dynamics and can make flash-like informed decisions. It's a weird mix of quick thinking, strategic planning, and a truckload of guts. Remember, the magic potion to successful scalping trading is mastering the market and the ability to make superhuman, quick, informed decisions. So if you're up for a migraine, why not jump right into it?